Hello, everyone, and thank you for stopping by. As always, I appreciate each and every one of you, your input, your thoughts, and your advice. We'll just start with this week's results in the market performance. The Dow was down 2.03%. The Nasdaq was down 1.86%. The S&P 500 was down 1.57%. All brought to you by good old Russian fear mongering and the news media wanting to influence people in the way they manage their money. The market's been in a downtrend since November. Nothing has changed, only the narrative that just gave the market makers a reason to push it further down. Um, if you want, you can go check the numbers as of January's peak and where you're at year to date. It's probably going to be in the double digits with the exception of the Dow. That's what everybody's telling you, to put your money in stable stuff like Coke, Pepsi. The blue chips, notice they were down the most this week. After several weeks of being told this is where you want to park your money, the dividend stocks, then they hammer those. So we'll just get on with the charts for the S&P 500 for the week. We talked about it retesting or attempting to retest and regain previous trends. This is the daily chart. And basically we had a retest of 4,500. I talked about that in an attempt to regain a trend from previously, regaining these highs at 45.88 roughly, regaining these moving averages. It failed. So now we're making our way back down to 4,300, which it retested that level and bounced a little bit away from it. But remember our head and shoulders. Excuse my doodling. But basically, we're going to be making our way down to 4,300, retesting that, retesting these lows right here, these lows right here. And again, I keep harping on this, but from here, it's pretty wide open. I mean, you've got stops along the way, but if you recall our head and shoulders, we're going to take this distance here and basically bring it down. Don't mean to repeat myself, but some people, this is probably the first time they're ever seeing this. So that's a full 10%. If it breaks 4,300, we're looking at another, at that point, 11%. It's based on price, so the further down you go, the chunk gets bigger. And we can try to find levels where buyers showed up. Down here. That's basically what we're looking at. I'm completely adamant about this 3,800 number. And that's where we're going to be looking for support. Now you find support here. It'll bounce in this general area in all likelihood. Here. And we're maintaining our previous high trend line. Notice you had a head and shoulder here, head, shoulder, head, shoulder. This shoulder got rejected. which is a good indication that it's going lower. To retest 4,300. With all the selling that went on, you could have buyers step in and try to push this toward this trend line. So it's a little different on the hourly chart. This is what I have here is the 1 hour chart. So our level of resistance is basically the peak to peak, as we've talked about. And you have levels where it tried to hold, specifically the 4,500 area, which coincides with that trend line. So they could try to run it up, maintain or regain this level, go sideways perhaps for a little while, and then try to go north. And then above that, you've got this general area here of 4,600. Notice these numbers tend to coincide with the whole numbers, 4,600, 4,700. Buyers try to step in and maintain or regain those levels. It's not typically unheard of. So that's what I'm looking at for next week. We also have GDP reporting on February 24th, which is a Thursday. So possibly we have a rundown till Thursday, the 24th, and who knows how far they want to take it. But I would be, if it continues south, I would be looking at these general areas right here. I suspect GDP is going to be a pretty good number. Last week, the UK reported their GDP of 7.5% growth for the year, and the markets tended to go up on that. Non-random patterns repeating, I suspect that the same thing is going to happen perhaps with the US GDP numbers coming out. And if that's the case, all of this fear, uncertainty, and doubt will play into that. People are too busy protecting themselves in the market. Meanwhile, the whales come in, scoop up all these bargains, and potentially break this 2-month-long trend that's been sending it down. However, you always have two sides of the coin. If the GDP is not what people expected or extremely low, then you could see us go even further. Lower. So we basically, this is what we can expect. I have a few other charts I can show you if the time comes. 4,200 is a line that certainly points, if we get and stay below that, certainly points to prices lower versus staying above 4,200 in the weeks, days to come. Then we possibly could be breaking out of this long-term trend of 2 months. If that's considered long-term to you, I just kind of break it down to each. Now this is a monthly chart, or I'm sorry, a weekly chart. So if we break these weekly lows, our next level of resistance is 41, then 38, 38.50. And then the monthly. So I'm going to change this just for posterity. 10 months or 40 weeks, however you want to look at it, is a pretty important trend line when it comes to changes in market direction. You only get below that level of 10 months, 40 weeks. Very seldom. 3 times in the last 5 years. And so it's something to pay attention to. If we close the month of February below this red trend line, which is the 10-month trend line, that is an indication that you need to pay attention to. We don't do that very often. But when we do, it points to larger declines in the market in a lot of cases. Now, you have cases where it bounced right here and right here, and here and here. You just don't want to see month after month closing below that number. The last time we had 4 out of the last 6 months, 1, 2, 3, 4, 5, 6. From its peak, you had 4 months that it were lower. That's the last time that happened, was unfortunately in 2008. From its peak, 4 of the last 6 months were down. They run it up just to retest that 10-month line, and then we continued further. So just be cognizant of that 10-month moving average. It seems to be important. Then the last thing I want to touch on would be obviously the overall loss, the overall drawdown. And this is just the S&P 500, the 500 biggest companies in the U.S. That's 20% if we make it down to those levels. And we would officially be in what they consider a bear market at that level. That would have given you several months below this line. Once we hit the 20%, they may try to run it up to retest that line, only if the economy doesn't do well and continues to falter, inflation goes high, GDP stays low to no increase. In other words, GDP is flat or lower, then that's a recession. You do that 2 months in a row, you've got a recession. And then these losses are magnified going forward until the economy turns around. So it's not completely unheard of in these times for the markets to drop 40, 50, 60%. 2000, it dropped, I believe, 80%. So just be cognizant of that. So I can take my trend line again. Absolute worst case scenario for where the market might bottom. Again, this is what's considered an ABC pattern. A, B, and then C. That points to 4,000 minimum case bear market. I say absolutely worst case, but that is, in all reality, based on the chart, that is a minimum case, putting us around 4,000, roughly 10% from where we're at right now. But it could go back to the mean. The mean is, and I may be misusing that term a little bit, that's all right, because we learn from our mistakes, right? If I go to a longer period chart and go from peak to peak, you know, that puts us at 37.9, that 3,800 again coming into play. If we want to drop it down to the next pivot point, now you're looking at 3,400. Just about 25, 22% from where we're at right now. Overall, a drop of 27% from the peak in January. So if we blow this up This is the worst case scenario. This is a recession type scenario. This is bad GDP. People start losing their jobs because companies can't keep up with inflation and there's layoffs. So this is a worst case scenario that I'm looking at here. So with that, that is all I've got this week, and I appreciate again your time and stopping by. And you guys enjoy the rest of your week and mark it on.